Okay, so from the daily, we saw that price have been making series of higher highs, higher low, higher high, higher low, higher high, higher low, higher high, and we are here. This is where we
Yeah.
are. So obviously, we are expecting price to move from a discounted level or a discounted price to make a new higher high. So this is what market has been doing over time. So automatically we are bullish from the daily bias. We are bullish from the daily price. So, but in the recent, there's what we call, this is the last
Yes, sir.
break of structure that we have on the daily. And when you have a break of structure, the next thing you look for is your demand level, which is this. Price have not tapped into that demand yet, but we have a fair value gap which price reacted from. This is the fair value gap that price reacted from. That bullish fair value gap from here to here. I believe you still remember what the fair value gap means, right?
Yes, sir. Yes.
So this imbalance we have here, price reacted from it. So when price have been given some series of internal bearish move, after that high we saw here, created
Yes.
here, price have just been making bearish moves, but these ones are internal moves. And now we have this price now tapped into this fair value gap
Well,
and
go.
rejected all the way up. So we haven't seen this. We have a zone, a demand zone. This last candle before this bullish push to the upside, this small last candle is our
Yes.
bullish candle, our demand zone. So when I saw that, I marked that. Then the next thing you do is to go down to your 4-hour time frame and see if you can refine that candlestick. To refine that candlestick. Now, where we the last bullish candle, which is this. This is the last bullish candle before the impulsive move to the upside. This candlestick here.
Yeah.
This candlestick is the last bullish candle before that massive move to the upside. Now, and what happened? We saw that price came in and tapped into it at this point. This is on Friday market. Price tapped into it and rejected. Now, I went down to my 1-hour time frame to read what I can see from that area. Now, the market did this. We saw market was coming all the way down, came to this point, gave a lower high, lower low, lower high, lower low, and then took out all these highs and came back all the way down here, gave another gave another lower low, and then swept it here to mitigate this demand zone. So all
Yeah.
this move from here to this point is just to trigger people, buyers, because a lot of people will have looked at it as a change in market structure. Our market have changed structure on the 1-hour time frame. Is trying to buy, and they will come here and start buying here. They will come to this zone here and start buying. Now, what will price do to them? By the time they are buying from here, they will be taken out. Their stop loss will be hit at this point. Their stop loss will be taken because they chose the wrong zone, and the market indeed gave them that signal. So, but then we are still in a downtrend because this is not reacting from any significant zone. This is a significant zone we can see here,
Yeah.
like our demand zone from the 4-hour time frame. So it's a significant zone. Now, what did we see? I saw a sweep of liquidity around this point. So market showed that it's rejecting this zone. So I came down to my 30 minutes, and this is what I saw on the 30 minutes. I saw like a break of structure. Market bought all the way up, came back down, broke that structure, this break of structure, and then I
Yes.
marked this candlestick, this last candlestick before this impulsive candle that I showed here. So I marked that candle, and that was what I saw yesterday when I marked, because this is still Friday price here. This was where price was around this place when I did the analysis yesterday. So market opened into today and came into that zone, into that demand zone, and started buying all the way up. So I expect to see price take out this buy side liquidity. So you can still go down to your 15 minutes. You see on the 15 minutes, I still saw that this candlestick was still there for me. So that was why I took my entry here, and then I just gave a little bit of space and expect price to get to this high. So we don't know what price is doing, but I think price is trying to retrace into this zone, which is a demand zone. After this break of structure that we had, this is the last candlestick before that massive move to the upside. So price might just want to retrace into this zone and then buy all the way up. So this was what I saw, but I'm expecting that price should get to this. This is a countering supply. This is a supply zone. This last candle before this massive move to the downside. So this is
Yes.
a zone. I'll be expecting a supply zone. I'll be expecting price to get to, and if it gets to this point and break it to the upside, then we'll be overall bullish. But as it stands now, from the 4 hour, let's see the 4 hour time frame. From the 4 hour, what we can see is that price have been ranging in a channel. Look at it. It has been ranging in this channel. So price have been ranging in this channel. Every time it gets to that channel, it goes up, come down, goes up, come down, goes up. Now it has gotten to this point, and now it should sell all the way down to this place. So, but then we'll react based on what the market is giving to us. It's reacting from this supply zone. We should expect it to buy all the way up. So market, by the time price comes to take this high, then we know that we are going all the way up. If price eventually comes to take this high, we are going all the way up. So this is what I can see in Euro USD. What you do when you want to run your analysis, you start from the daily and follow what you are seeing. From the daily, you go down to the 4 hours, then to the 1 hour, then just keep refining your zones, then to the 30 minutes. 15 minutes should be your entry. 5 minutes should be your entry. So you get your confirmation and you take your entry. So that was what I saw on Euro USD. And on GBP USD, GBP USD and Euro USD, they move alike. I hope you are aware. Are you aware of that? Hello, can you hear me? Can you hear me? Hello, James, are you there?
Yes, I'm there, sir. My network just went off.
went off. So I
Yes.
said, I hope you know that both EU and GU moves alike.
EU and GU. No, no, sir, I don't
Yes.
really know, sir.
Okay. Euro USD and GBP USD, they move alike. And there's what we call DXY. DXY.
Yes,
That's,
sir.
they call it US dollar index. US dollar index is just like an indicator of GBP USD and USD, what is it called? Euro USD. It means that if this US dollar, that is this US dollar index, if US
Yes.
dollar index is selling, if US dollar index is selling,
Yes.
then Euro USD and GBP USD will be buying. They go in opposite direction.
Direction. Okay.
So they are indicators to know the moves of Euro USD and GBP USD. So this is what it has been doing over time. This is what it has been doing over time. This were my previous analysis on it. So you see, from this point, it broke this structure, came back into this demand zone, tested it, and went all the way up. Broke structure again at this point, broke this structure. After breaking that structure, it came all the way down to this last candlestick before that impulsive move. This candle
Yes, sir.
came back into this candle. So after getting into that candle, what happened? It broke structure again. So this is on the daily. And after breaking that structure, what did he do? He returned into the demand. Even though he did not get to this last candlestick, but it respected this candle. This was the candle it respected. And then moved to the upside. Now, this is where it is now. It has swept this high. It has swept this high. So expectedly, I would be expecting that it should sell down to this doji candlestick here. It should sell down to this doji candlestick before buying to the upside. So I'll be expecting something like this before going to the upside. So this is, for me, this is what I'll be expecting the market to do. So because of this sweep of liquidity we saw here, we came down to our Euro USD. What did our Euro USD do? Our Euro USD was supposed to also sweep this low, but it did not sweep this low. Rather, it created a failure swing. That is what we call failure swing. That is, it failed to break the low. So they call it SMT. They call it SMT. SMT. Smart money techniques. It's a smart money techniques. You will see GU also did the same thing. Look at it. So they call it smart money technique. So it is an indicator to enter a buy. You see it?
Yes, sir.
It failed to break. So overall, I'll be expecting that this high, by the time this high is taken, maybe price does something like this, takes this high. Well, can you hear me?
Yes, I can hear you now.
Okay, so the bullish move is confirmed when this high is taken. So this is the overall buy side liquidity on the daily that we are having. So when I came to my GU rather, and I saw this move, to the ups, the reaction from this demand zone, I saw this rejection. I came down to to my 4 hour, I saw how the price rejected. So this last candlestick became the demand. So price went all the way up, came back and rejected it again. See the massive rejection it gave on this other block or this new demand zone. So I went down to my 1 hour. And saw the rejection. Look at it. Price gave a bullish engulfing candle to reject that zone. So when I saw that, I was looking for an entry on that zone. There was no clear order block. This is this last candlestick before this impulsive. So can you hear me?
Yes, sir. The network is kind of bad.
I'm sorry, I had a call. So
Okay.
I went down to my 30 minutes, and what I can see is this candlestick here. This is a doji candle here.
Yes.
That doji candle makes this the demand zone. But I was looking at it that I was not too sure if price was going to come to tap into it. So I went down to my 15 minutes and I saw this candlestick happens to be the breaker block. I taught you about breaker block. Do you still remember it?
Sir, not really, but I only have idea on order block and FG, but I was not understanding the breaker block that way.
Now, see, let me give you. Imagine a market that is coming down.
Okay.
In a downtrend, and then it broke this low down this way, and then took out this high this way.
Okay.
Are you getting it?
Yes, sir.
Now, this is where it broke this low here and broke this high here, showing you that it has changed to become a buy market. No more selling. So you should be looking for buys.
Okay.
This last candle here, which you would have marked as your supply, Abi?
Yes, sir.
If you want to be selling originally, you will say, okay, this last candlestick here is my supply zone. I want to sell from there, continue to sell. But now, market has broken that zone. When price comes back into that zone and give you a rejection, it is possible it will buy. So that zone, this zone here, is what? Is your breaker block. Breaker block is a failed supply zone or a failed demand zone.
Okay.
So this supply zone failed. Price broke it all the way up. So it is a what? It is a breaker block. Now, if that same thing happens in a sell scenario where, let's say, in a sell scenario, market has been buying, and then this is supposed to was only this network. So if markets returned back to that demand that was broken, then it is your breaker block. So this high was broken, this low was taken. So there's also what we call mitigation block. I don't know, I think I taught you all of that. Mitigation block. For mitigation block, this is what happens in mitigation block. Imagine that price is creating series of lows, and then it gets to this point, instead of breaking this low, just like it did here, it did not break this low. I hope you can still hear me. Can you still hear me?
Yeah, I can hear you, sir, but the screen is not moving. Yes.
What about now?
Yes, it's okay now. Yes.
It's okay now?
Yes, sir.
Okay, so now I, I was trying to analyze a mitigation block, even though you might not really be needing it, but if you have the knowledge, it's good. Imagine market is going on a downtrend, and then instead of breaking this low, it refused to break that, just like that failure swing I talked to you about just
Yes, sir.
recently. It failed to take this low and then came and took this high. Are you getting it?
Yes.
Now, it did not take this low, but it took this high. This candle here, this candlestick here,
Yes,
is
sir.
your mitigation block. So price will come back into it, then continue buying to the upside. So sometimes you don't just take it, you wait for confirmations. You see some candlestick rejecting this zone, telling you that we want to buy. There is strong resistance or support in this point. So that is where you will now engage the buy and continue all the way up. So that's for mitigation block. Mitigation block, it will not take this low. It will have a failure swing. But for breaker block, it will break the low and break the high to form a breaker block. Do you understand it?
Yes, sir.
Okay, so that was what I saw in. So I saw that breaker block and I marked it, and I've been expecting that price will come into it and give me some kind of confirmation to buy. And if it breaks that low, then this is another low we should be expecting it to buy all the way from. So that was what I saw on GU.